You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Council Incorporated. Welcome to the show, Danielle.
Hello, Jim.
I do check out your blog all the time. It has interesting articles. The first one I saw today, Canada's lust for home equity lines of credit continues, and you're saying you're stepping into a giant pothole with no bottom.
Yeah, well, it's not what I'm saying. It's the charts, Jim. It's the math. It's the trends. We've got over 1.8 trillion of household debt in Canada as of April. We've had this huge surge in these revolving lines of credit and equity lines of credit, and people have been using their homes like ATMs, just as the Americans did in the early 2000s, leading into their big house bust in 2006-07, where people are not just borrowing to fix up the place. They're borrowing to, have trips and to buy handbags and to, sustain all sorts of unsustainable behavior. And the only way they've got away with it is because the value of the housing has continued to go up at a rapid pace in the past few years. And so people are not aware how precarious they are. That when that price appreciation stops, nay, begins to reverse, Jim, which is what happens at the end of a secular boom in real estate, is the price gains that were, quote, made start to be taken back, and the debt is fixed, right? The debt not only is fixed, it grows with interest. So you've got a depreciating asset in that type of climate and an appreciating debt, all while people are losing jobs typically because the economy is doing bad and in a downturn. So it's a very dangerous position that people have set themselves up for. And the Bank of Canada continues to express concern. However, at the same time, the Bank of Canada essentially represents the banks in the country, and the banks in the country, of course, are all trying to shove this debt credit product down the throats of whoever has a pulse. That's how we got into this mess. It's how it got into the mess all over the world. Canada's no different. We're just late in the cycle relative to many other places. And the finance minister in the Bank of New Zealand and Australia, they're all expressing similar concerns in those, late cycle commodity centric economies where, unlike the US and many of the European countries that had their big bust in 06 through 08, the commodity centric countries were able to continue borrowing after the 08 demise because of the commodity focus and because of the QEs of the world pumped into asset values. And so, it's interesting. I don't know if people appreciate this, Jim, but, you being on the West Coast, it will probably ring true. The influx of Chinese money has been greatly written about in the past few years in terms of asset appreciation in places like Vancouver. Chinese money coming out of China and looking for other places to park, and that's really been at the leading edge of driving demand and higher prices, way above what's reasonable for Canadians based on their income, right? But what people miss is that that's exactly what happened in the late 80s when the Japanese bubble burst. So you had this massive run in the 80s. All things Japanese were sold everywhere. It was a unsustainable pace of growth there as well. And they had a big bubble in their housing realty, and they had a big bubble in their stock market. And when in the final throes of that, money is trying to find value, trying to diversify, and it moves out of those countries and starts looking for places around the world to park. Well, North America was a preferred place, and it helped to drive real estate prices to a big peak in 1990 as well, and that certainly happened in Canada. But we put that chart this week on of the Canadian dollar, and it really tells the story because you see the Canadian dollar since 1985, and there was this big run up from 85 to 90, as for various sort of similar story to what went on in the past run up, from 2001 to say 2011. In that decade, we had everyone, consuming commodities, buying products that Canada sold. You had appreciation of Canadian dollar. At the same time, you had money coming out of Asia and looking for places to park, which helped drive our domestic economy, our real estate market, but everything sort of peaks together. And then what happens is you go through this secular downtrend that mean reverts all those other excesses. And that happened in Canada from 1990 to roughly 1999. And then it was we were basically after a decade of the leverage coming back out of assets, of, Canadian dollar weakening enough to start finding demand for exports again, and you get this setup for the next big secular boom. So I guess what I'm trying to say to people is we've seen this movie before. It's a pretty recurring cycle. And what it means is that we're likely to see greater downside in Canadian realty from here, in Canadian dollar from here, in oil from here, in commodities from here. So all that's sort of a natural reoccurring phenomenon that we should fully expect. Trouble is, overconfidence in the boom phase leads people to become highly indebted. And as I put that quote on today from Irving Fisher, the famous economist who was writing in 1933, he pointed out that, his quote was that debt, overconfidence is not really a problem except when, as, and if it beguiles its victims into debt. And that's the very nub of the issue. We were overly confident in the boom phase up until 2011. We continued to borrow our brains out in Canada since then. And people now have, excessive levels of debt, very poor balance sheets in terms of anything other than housing assets, not a lot of savings. And now they're going to see what mean reversion looks like. And the fact is that once it starts, it doesn't happen and clear in a matter of weeks or months. It typically takes many years, about a decade. And that's when everything works back down, excesses come out, people finally, either declare bankruptcy or get out of debt by paying it off over time, build up their savings, and then that sets up the strength for the next secular boom after that.
And of course, too, over-reliance on oil. We just had the G7 declare they don't plan to be using any oil at all at the turn of the century. And if you take a look at how technologies change, 100 years ago, the world ran on horses. The horseless buggy was just coming into a trend back in, 1915.
Yeah. So, it's exactly that. You've got a trend in the world. As much as the status quo folks hate to hear anyone say this, there's a trend in the world away from combustion engines and away from oil and gas as the primary fuels. And, everything that anyone that's paying attention to the big picture or is aware of how these very long cycles tend to play out would realize that that's a natural progression for humanity. We didn't stay in the Stone Age, we didn't stay in any of these ages indefinitely. Everything in life is a phase, and the progress this time is away from the internal combustion engine and towards different ways to drive our technology and our equipment and to power the world. And you just haven't got the big demand there anymore. The growth in China is continuing to decelerate. Chinese momentum indicators are suggesting Chinese growth is going to be less than 3% or is about less than 3% today. The World Bank today lowered its 2015 global GDP forecast to 2.8% again. So, we've had the U.S. after the last recession, after the 2008 recession, we've averaged in this period 2.2% a year of real growth. And that's about half the long-term trend that used to be in the prior booms before the world got so mired in debt. So we got about half the growth today, or half the demand, as we had before in the boom phase. And that's because of the debt overhang. And that's what Canada faces too now with the weight of the debt and less demand for the product. And that is, like I say, it's a stubborn trend. It's durable. It doesn't typically clear in a matter of months. It typically takes several years for inventories to be worked down. And in the process, people are making the shift to all sorts of alternative fuels, not only because of concerns about climate, but because of concerns about water as well, right? Just the need to be more efficient and intelligent with the way we're using things like finite resources like water, mean that we have to think about much more intelligent ways to manage our energy policy. And so anyway, it's part of the great unwinding of the prior period, and I think it'll persist and go on for some time, which is great. We have lots of room for improvement, lots of reasons to be to think that we can do things a lot smarter than we have in the past few years. But it's the readjustment phase. People have to appreciate that it means less consumption of frivolous and more investment into things that will sustain us over the long term. So the infrastructure, the technology, the innovation, investing in human capital, in developing expertise in things that will serve the world going forward. All that matters so much more than the consumer goods that the world was focused on in the past 10 years.
Is it a symptom of the times that in the Vancouver suburb of Surrey that there's a drug war going on where virtually there's a shooting every night as two rival drug gangs try to one-up each other? They're that desperate for money that using guns to get what they need or want is becoming commonplace. Will we see more violence on the streets?
Well, there's certainly that way we can go that way. Typically when there's less money, there's less hush money. There's less money to placate the masses in terms of, bribes or whether it's drug money or whatever. There's less stability in some of the developing countries, where again there's a lot of bribes and money spent to keep a status quo. Certainly if you look at places like Saudi Arabia, where so much of the oil money is spent trying to keep people placated, if you will, the population. So if you get less energy funds coming into some of those areas, if you get less sales, less revenue in general, then I suppose there's less money in general to go to non-necessities, which arguably I suppose drugs are non-necessities. I mean, depending on your addiction level, I guess. But I don't know how much the medical marijuana industry and the availability. The Supreme Court recently, wasn't it today, just said that they think that in Canada there's nothing illegal, it's all legal, the rules that have come in with regard to medical marijuana. So maybe if drugs become more accessible and mainstream in terms of, dispensing it through the normal channels and they're taxed, that's good for revenue, but maybe it's bad for illicit drug sellers. I'm not sure if there's any, detracting from their market share if people start being able to get access to things like marijuana sort of on the more mainstream platform.
Well, look at all the violence that went along with Prohibition back in the 30s. When the government took over liquor sales, that violence ended. Yeah,
that's true. So, I often go back to, as dark as sometimes it seems in certain areas today, I think we have more progress and more hope and ability now than ever before in the 50 years that I've been on the planet. You think about when we were growing up in the 70s, things were not better then. They were very difficult in many ways in human rights aspects all over the world. I know we've made progress in pockets, not everywhere for sure, but I really think that there's a lot more intelligence, there's a lot more awareness about the world and the interconnectedness of it. There's more education. The internet has definitely broadened all that and made information more widely accessible. So I'm actually quite optimistic in that sense. I think we're headed in the right direction in a way that we haven't been in probably decades. But it's, again, the status quo is trying to impede that progress to a great degree. And the status quo are the people who have been raking in money from the old systems, right? And we need to sort of topple that balance and force change. And I think it is an uncomfortable process. I think it does bring, division in some ways and unrest. But hopefully in places like Canada, at least in North America, we can do it largely in the sense of social protest, in the sense of putting demands on the legal process, on the political process, on, we have mechanisms in place to affect change in a more stable manner. It doesn't have to be violence and uprising, but, we'll see how it goes. I think that, as I say, lots of talk about the Fed in the U.S., the central banks wanting to raise rates now, and the logic goes, well, they know we can't be that far from the next recession. We're 7 years past the peak of the last cycle. Any day now we should be preparing for the cyclical downturn, and they have no rope to use. They have no rate cut room to run here. So they're trying to hike rates in the near term so that they'll have some ability to cut in the long term. But at the end of the day, we're due for that downturn. And you've got asset values that are not sustainable in any post-credit bubble world where, where debt levels have to mean revert, where people have to build up savings and spend less. And yet you've got all these expectations that we can continue on that prior path of growth, and all the pension funds and deficits are being pretended that they're not there because people are hoping we can somehow go forward at a rapid rate again. It's just not happening, and it won't for several years as we rebuild this base of prosperity back into the economy and into the society. So John Hussman was writing this week. He's an economist from the U.S., and he was just pointing out, you can't literally have your cake and eat it too. So the QE gains, the jolts of infusions of capital that came from central banks around the world in the last 6 years to jolt, asset prices back as quickly as possible after their big collapse. They wanted to get back as quick as possible. So they did all these extraordinary measures to make price move quickly. But what people miss is that the whole idea of that was to get that up front in the hopes that the economy would pick up enough to justify those high valuations after that. In fact, what you can't have your cake of those quick recouping of losses in the short term as well as decent future returns from these levels. It just doesn't work that way. So the fact is, you can we've already spent all that money making this quick, quote, bounce, and now we have to pay back again. And the payback period, as I say, goes on for years typically. So it's not, it's not dark to say that. It's just realistic to say that and to understand the way the equation of these things works. And to know that the higher the valuation at the outset, whether it be real estate or stocks or bonds, the higher the valuation, the lower the return expectation from that point forward. And so what we really should hope for is that we do get this mean reversion washout, so prices come back down to sane levels where people can afford to buy housing, for example, on a sustainable measure, and not by getting more and more debts to try and keep it going for a few months, but to actually build their wealth over time again. And also, then you get some decent income flow off things. Like for a long time now, the asset prices have been so high that it makes no sense in terms of the income flow that comes off of it. People are not making enough to justify the risk and the endeavor, but they've just sort of said, oh well, as long as it goes up, I don't care. In this new world, everything's going to be about how do you get enough income to pay the bills, the principal and the interest of debts, as well as living expenses, and invest for the future. Right? So you need to have a rebalancing of price across many different sectors in order for that equation to rebalance again.
We'll have more with Danielle Park right after this.
More and more people are looking to the Internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Danielle Park. Danielle, you mentioned there's a lot of concern about future water supplies. I know here in BC, we've had our driest ever May. The snowpack was very, very low over the winter. And yet our reservoirs, we're told in Vancouver, are at 91%, which is pretty well what there are at every year. Yet the prospect of a very dry summer is looming over us. And what about the rest of the planet? California's been under a drought for 50 years.
Yeah, absolutely. It is we're having a dry spring so far in the east as well. It's rained very little. So, I think here's the next phase of this revelation. We have come through a period where we took water largely for granted, certainly in places like North America. And I think the revelation in this next bit is going to be that water is a finite resource. It's the most valuable commodity on the planet. It's the most critical commodity on the planet. And yet we have been wasting it for years now, developing other forms of, energy, agricultural practices, basically doing everything that we felt like without any concern, letting companies like Nestle, bottle it and sell it back to us and make huge profits for them and really undervalue the commodity itself. And I think in this next bit, partly because nature is demanding it, people are having to understand that there is an enormous economic value to water. And when you're doing equations that, spend, 4 barrels of water for 1 barrel of something else as a product, you're probably not making a good trade. And so I think it's a good thing because it was inevitable that we had to come to this. But in many ways, until the West feels the crimp, developing countries have water crisis all the time, but they also don't have a lot of economic clout or research ability or, innovation ability in poorer economies. When the pinch comes to the West, I think that's when you get the incentive behind all the developers, researchers, innovators, companies to really double down on smart solutions. And I believe it's totally within our power. We have so many really exciting technologies in the works and coming out day after day after day here. So it's definitely a positive story, and I think, again, necessity being the mother of invention. Unfortunately, with humans, we seem to need to have a bit of a crisis before we react, but that's fine. If that's the catalyst, it's coming now, and that's productive.
Well, I always wonder in California, they do have tremendous rainstorms. They do get a year's worth of rain in one day. Why don't they build more cisterns and underwater or underground capture areas for that water instead of letting it flow out to the ocean?
Yeah, well, because they've been able to get away with not doing that, right? And that's basically the short answer. If humans can cut corners and get away with it, they will. But the crunch in California, there's some statistics I was looking at today. The California oil industry uses 80 billion gallons a year of water on fracking and other extraction, and that's more than the San Francisco and San Diego use all year round for everything that they're doing, including all their farming. So things like, some of the new technologies, as I say, I think, to me, so much hinges on our evolution about energy, because we came up with these sort of new innovative ways to get fossil fuels in the past 10 years, and that's been, the net impact has been that we've flooded the world with fossil fuels, and we have huge inventory of that, which in the short run means we have cheaper fuel available. That's great. But in the long run, the dynamic, as I say, the trade-off for trading something completely irreplaceable like water for something that is replaceable, like fossil fuels. And we've proven that with the millions of different kinds of energy source that you can capture and harness and store and trade. And even the Saudis are recognizing that they have other commodities like solar, which is, more plentiful than the oil they have, So it's not necessary to waste that finite commodity water trying to get this other commodity which can be replaced with much more intelligent, sustainable sources. And I think that the world is just starting to come to that penny dropping.
Danielle, thank you very much for chatting with us.
Thank you.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite, her website jugglingdynamite.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. You can forward your comments about the show to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.